Good afternoon.
Good afternoon, Madam Chair.
Welcome to the Senate Finance Committee. Today is Wednesday, January 22nd, and we are going to hear from the Maryland Department of Labor. Thank you, Madam Secretary.
Thank you, Madam Chair. We have a number of topics we wanted to brief the committee on today. We're going to start with Unemployment Insurance Trust Fund solvency. I'm joined by Assistant Secretary Rachel Torres, who joined the UI team mid-year last year, and our Chief Economist, Mike Sayers. We are also going to talk about family and medical leave and about workplace fraud and misclassification issues. So we're going to start with unemployment insurance, and I just wanted to give the committee an overview of the trust fund. Our current balance is $1.9 billion. The trust fund is in strong shape, but as you will see from the modeling that we have provided, and I want to acknowledge Senator Cramer and his leadership of the UI committee, like the oversight committee, I think that, we wanted to provide a snapshot of what the trust fund looks like, and also we put together some modeling based on the requests from all of you to see what different scenarios would look like. I think we want to acknowledge that in the past, Maryland's solvency of the trust fund has not always been as strong as it could be. Something we learned from pandemic is that when there are sudden shocks to the system, what that means is increases, sometimes drastic increases on tax rates for participating employers at a time when they are least able to bear that increase. So we wanted to have this conversation to take a longer term look at what things look like in the trust fund. Here are just some overview facts of where we are. I'm not going to read through them. As you know, Maryland has historically low unemployment right now, and we have a low number of claims. That said, I want to acknowledge we still have a number of challenges with our system. We're not as fast or efficient as processing claims as we'd like to be. Our IT system still has a number of challenges, but that's not our focus today. We really want to focus on solvency. Obviously, we're happy to answer any questions. In particular, I wanted to talk about how we think about solvency, and I'll turn it to Mike to add some more details. Basically, what it is we use a metric called the average high cost multiplier. That's basically how much of the benefits in a regular recession can your trust fund pay for, like basically how much have you saved for a rainy day. We have modeled a number of different options, thinking about where unemployment insurance could go or how it could be modified through legislation. I do want to also note, and we'll come back to this at the end of the presentation, running unemployment insurance has become increasingly expensive. We saw in the pandemic with record levels of fraud that we had to make really big investments, and it's just as time-consuming to guard against fraud in bad times as good times, because even though there are fewer legitimate claimants, there are still many attempts at fraudulent claims. And you have to make the basic investments in the infrastructure to check ID, to do cybersecurity, and all of those things. And unfortunately, the federal government has reduced its amount of reimbursement to the states. I think we're in a situation where we don't know what federal funding may look like going into the future. And in the past, we have had gaps, but we've used ARPA funding to fill those gaps. Obviously, that time is at an end. So we'll come to that in a moment. But I'm going to turn to the next slide, and I'm going to turn it over to Mike to talk in more detail about the solvency.
Wonderful. Thank you very much. And thank you very much to members of this committee for having us here today. So first, we want to talk about just what is unemployment insurance solvency and what do we mean when we think about that term. And really what it is we want to make sure that we have enough money in our trust fund. 2 slides ago, there was a number. We have $1.9 billion in the unemployment insurance trust fund. That's the most money that we've ever had in the trust fund at one point. But what we want to make sure is that we have enough money in that trust fund to pay out benefits to claimants for a quote-unquote typical recession. And so the way we do that is through this measure that's called the average high cost multiplier. It's a little bit complicated. It's just a ratio of 4 different things. But essentially what we're trying to measure is how many years could we support our claimants at current levels. And our target for that is 1. So what that means is we want to make sure that we have enough money in the unemployment insurance trust fund to support Marylanders through 1 year of a typical recession. It's a nice thing to have an AHCM, as we call it, above 1. But what it really also enables us to do is go to the federal government and get interest-free loans. So one thing is during a recession, you'll see there's a chart on the right-hand side of this slide, and it shows the average high-cost multiplier over the past 40 years. And you can see during recessions, there's a big drop down as we've paid out claims to benefits, and then there's usually a big spike back up. And what happens there is we've gotten a loan from the federal government. That loan is most of the time not interest-free. There are strings attached, and we have to pay back money to the federal government. When we have to pay back that money, it is often because it's during a recession. It's often a time when we can least afford to spend that money. We have a lot of other things we'd like to spend that money on, such as supporting our businesses and workers as they try to recover. And so now that we have an average high-cost multiplier above 1, I think this is probably a good time for this committee to kind of think about what solvency looks like in the long run, and that's why we've been asked by members of this committee, as well as on the House side, to think about modeling solvency out into the future. There's one point. Oh,
Go ahead.
So there's one point else I'd like to make here, which is that if you take a look at the chart, there's ups and downs because of some of the recessions, but you can see that over the long term, there's been a downward trend in the average high-cost multiplier over time. And then during the Great Recession and pre-pandemic and right after the pandemic, there's been a bit of an upward tick. And so I'll get to that on the next slide, but Secretary Wu.
No, I was actually, this may have been where you were going. The reason it goes back up is because we increase the employer tax tables, or we get federal investments of money. So like this last one you see during the pandemic, Governor Hogan made sure we put, $800 million of ARPA money into the trust fund. When we have national disasters, you sometimes get that sort of federal support. If you have a localized hit to the economy, like a state-based one for whatever reason, we can't rely on that sort of support. So thinking about how do we guard against those kinds of shocks on a state level is important.
Yeah, absolutely. And so one of the reasons that our average high-cost multiplier and the solvency of our unemployment insurance trust fund has been rising over time has been just very, very historically low levels of unemployment insurance claims. This chart goes back to 1990, and you can see that 2022 and 2023 had the lowest levels of unemployment insurance claims, weeks paid out for and compensated for by our UI team in that time. But really, if you go back to 1969, that's when we've had the last time we had fewer weeks compensated for. 2024, also very low levels of claims. We've had a very low unemployment rate in the state. We're at 3.1%. As of November 2024, which is below about 1 percentage point below the national average. We've had historic low levels of unemployment here in the state of Maryland, down below 2% for several months in 2023. And that's been a very good thing, both in terms of our job seekers being able to transition into work, but also for our unemployment insurance trust fund, because it means that there's more money coming in than we're spending. So that's allowed our trust fund balance to grow over time. However, I think as we look out to the future, there are several reasons why the unemployment insurance trust fund may fall, or our average high-cost multiplier, may kind of experience a decrease over time. One of those is, as I mentioned, our unemployment rate is historically low. And so an increase in our unemployment rate back towards pre-pandemic levels, which is about 3.75%, is likely. So we have historically not been as fortunate to have as low of an unemployment rate as we have now. We may have a higher unemployment rate in the future. So that would increase the number of weeks that the department is having to compensate for. Similarly, the weeks that we're compensating for may get more expensive as we have just typical inflation, let alone the strong wage growth of the last few years. The average weekly benefits that we're paying out are only going to continue to rise, and that's going to put upward pressure on the costs that the unemployment insurance trust fund is facing. So while we have upward pressure on our costs, our revenues are not able to necessarily grow at the same rate. Because our taxable wage base has remained fixed at $8,500, really the only way that revenues rise in large part is due to overall employment growth. So as we add more workers to the economy, that's typically what pushes up the revenues. There's some adjustments there depending on which tax table we're at or employer's experience rating. But generally, as the final bullet notes there, typically the longer an employer is around, their experience rating is generally falling over time, and that's putting some downward pressure on contributions as well. So over time, we tend to see the average high cost multiplier. There's some pressure that might pull us back down, and that explains a lot of the pressure kind of earlier on in that chart several slides back that showed the average high cost multiplier in our solvency calculations generally falling over time. So as I mentioned at the start, we were approached by members of this committee as well as on the House side to do some modeling of the Unemployment Insurance Trust Fund. And what we've done, we're using a model that comes out of the U.S. Department of Labor. It's called their UNIS model. They custom built this for Maryland, but they do this for any other state that asks. It's readily available. Anyone can email them and ask them for this. Other states use this to forecast their trust fund solvency. And I just want to stress that we mentioned at the top of this presentation that these slides and these results are preliminary. We're still going through the model and making sure that it tracks with our understanding of Maryland's system and Maryland's economy. But these are the preliminary results and modeling efforts that we have so far. And based on this UNIS model from the U.S. Department of Labor, the main variable that seems to kind of impact our solvency is the unemployment rate from a macroeconomic perspective. There are other things like employment growth, labor force growth, wage growth that we've noted down below. But really, the unemployment rate, which determines ultimately how many claims you're paying out for, that's really what's driving our solvency. And so what we've done is model two scenarios. One where our unemployment rises from our current level of about 3.1% up to the pre-pandemic level of 3.75%. So that's assuming we have a tight labor market. A tight labor market just means that generally there are more job openings than there are job seekers. And the second scenario that we modeled is a return to kind of the long-term historic average of 5%. So you can see the chart on the right-hand side of the screen or on the slide is showing you our unemployment rate over time. As you can see, about 5% is that general average from 1990 through 2023. And so this slide is showing the average high cost multiplier over time, assuming there are no changes to the program. We're expecting the average high cost multiplier to stay above 1. So that means our unemployment insurance trust fund is solvent through about 2028, 2029, depending on the unemployment rate, and then decrease over time. Again, the reason why we expect that average high cost multiplier to fall over time is just because there's a difference between the benefits that are being paid out from our trust fund and the revenues coming in. So the chart on the right is showing the difference between benefits and costs, assuming a quote unquote tight labor market with an unemployment rate that reaches a maximum of 3.75%. So even though we have a steady unemployment rate in the later years, because inflation is contributing to more and more costs in terms of the weekly benefit amounts, that's pushing up the cost to the system faster than typical employment growth can increase the revenues coming in. And so those two pressures just don't balance out. So one of the things that we were asked to do by members of this committee and from on the House side as well was to take a look at some potential different programmatic changes to how unemployment insurance is modeled. And one thing that I want to point out on this slide, which is the slide previous, assuming no changes, if you take a look at that gold bar, so this is kind of the worst case scenario that we modeled, which is an unemployment rate maxing out about 5%. Until you get to the very last years in this model where our solvency, our average high cost multiplier is down around 0.3, until you get down to around there, we're still at tax table A, according to the projections from this UNIS model. So one of the suggestions was to see what happens if we drop tax table A and have instead what's currently tax table B be the lowest set of rates that employers are paying on. And you can see that this does tend to bring the average high cost multiplier up. I think that generally should track. We've been able to raise in this model, you've generally been able to raise the revenues upwards, and so that is a little bit closer to the benefit payments amount. So in this model scenario, the benefits paid out is generally the exact same, and then you've had revenues rise upwards. The other scenario that we were asked to model comes from a joint effort between Delegate Charkoudian on the House side and Senator Crosby, and what that's doing is several adjustments to the taxable wage base and the maximum weekly benefit amount. So we've been This adjusts the maximum weekly benefits to 50% of the average weekly wage. The dependent allowance has been increased to $25 and then indexed to inflation thereafter. And the taxable wage base is set to 20% of average annual wages in a given year. So we assumed that these would phase in over a couple of years, similar to prior legislative efforts, and then take effect. You can see that assuming a tight labor market, this would increase the solvency, upwards, going to about 2. It would be our average high cost multiplier up through 2035. Whereas if there's a higher unemployment rate of about 5%, the average high cost multiplier in our solvency estimations stay a bit more stable, between 1 and 1.5. This slide is just showing you, again, benefits and costs. You can see that the benefits and costs are a bit more aligned when you have a higher unemployment rate than they are if you have a tighter labor market. And with that, I'll pass it back to Secretary Wu to discuss the administrative fee.
Thank you, Mike. As was noted, over time, and we've gotten a lot of questions. First of all, I just want to add a couple pieces in there that I'm getting a lot of questions about now. One is, this is a little bit of a segue, but what about federal employees? What if there's a lot of impact to federal employees in Maryland? I wanted to note, even though the state administers unemployment insurance benefit for federal employees, they're a direct reimbursed employer. They're not an insured employer. So for example, when there are a bunch of federal employees laid off from an agency, the federal government directly reimburses the uninsurance costs for those people. We still have to administer it, and with that's on us. That costs us money to do that. But so that does not flow into the modeling here, and that is not part of the modeling we put together. Federal contractors are not directly insured. They're treated like other kinds of private employers, so they are insured employers. So if there were to be big changes there, that would have an impact on our trust fund and our direct benefits. So I just wanted to note that because that's a question we're getting a lot right now. I did want to spend a minute talking about, and this shows, the red line shows the expenditures for unemployment insurance to run the program. You can see we've had federal funding, which is the green bars, the ARPA funding, the feds have like a reimbursement basically ratio that is not increased. In fact, they've cut parts of the reimbursement. All of the states are having this problem. I want to say something like 33 states have levied a separate administrative fund requirement. The way the federal law is structured, we cannot draw on trust fund monies to actually administer the funds. We have to administer almost $2 billion, but we can't use any of that money actually collected through UI taxes to actually pay for the costs. So we do have a proposal the department has a proposal to have a small fee to try to address the administrative gap, 0.15%. I think it comes out to a maximum of $13 per employee per year, and that's at the top end. So it's not large, but it definitely is needed. I will say that even though we've had a large drop-off in claims, we still find that people have very complex cases. The department scaled back drastically in recent years on in-person service. We are trying to turn that around. I think you probably still all hear from constituents. That's what constituents want, right? They feel frustrated. We had a contracted out call center. We are moving that back in-house because those individuals on the call center were not able to actually resolve issues in people's claims. They couldn't under the law. They could just, say, I'll get back to you. Here's the problem. And we still see we have, I think, something like 1.3 million calls that came into our call center last year alone, even though the number of claims is way down. It's because I think people were frustrated, not able to get through and get the service they need and want. And so that is part of our goal in having more administrative funding, is providing better service to constituents. So we'll stop there. Happy to take any questions.
Senator Kramer.
Thank you, Madam Chair. Good to see you, Madam Secretary, and thank you for the presentation. I think it's important for the committee to be getting a little bit up to speed on this issue, because there will be legislation coming during the session that is going to be addressing some of the concerns about long-term solvency, as well as looking at the benefits that will be paid to unemployed residents. Would you share with the committee what the current benefit structure is and when that was put in place, if you have that information handy?
So the maximum weekly benefit in Maryland is $430 a week. And I want to say that hasn't, Rachel, do you remember what year it was?
It's over 20 years.
It's over 20, it's been there for over 20 years. I will also note the way the tax structure is, it's highly regressive, right? So because our taxable wage base, the maximum is $8,500, lots of, most employers, if you have full-time employees, they're making over $8,500 a year. But as long as, so that means if I'm an employer and my employee is making $10,000 and right next to me is sitting, a large corporate employer and Mike's employee is making $100,000, we're each paying the same tax on that person's wages. But, just say my employee only makes $10,000 a year. When they get unemployed, their benefit is very low. It's only $100 a week. Mike's employee, who's making $100,000 a year, gets the full maximum benefit of $430. So, there is also, as the committee thinks about these things, looking at the way the tax structure impacts, especially a lot of smaller businesses or businesses with a lot of part-time employees. They are carrying, perhaps one could say, a disproportionate share of the tax burden.
Thank you for that. Thank you, Madam Chair.
I'll add that the $8,500 for the taxable wage base was that was put in place in 1992. So also a long time. The taxable wage base level of $8,500 was put in place in 1992. So even longer ago than the last time the update to the maximum weekly benefit amount was.
Right. And those are set in statute, the tax rates are set by number, and the wage base is set by number. It doesn't index or change over time. So,
thank you.
Senator Hershey.
Thank you, Madam Chair. Thank you, Secretary, for your presentation with your staff as well, too. To follow up, maximum weekly benefit, $430 per week. Is there a set duration on how long that can last?
the typical is 26 weeks, maximum of 26 weeks.
Max is 26 weeks.
Yes. When we have federal emergencies or economic downturns, the federal government, sometimes has extended benefits. It adds on different programs.
Okay, and that's the max. Do you know what the typical time frame that
Do you know
a
that,
Maryland
Rachel? The
individual
average
that you-
duration of unemployment? I don't know it off the top of my
time
head.
frame?
Not off the top of my head. It varies. We've had number of claimants that do take the 26 and others.
I mean, but with unemployment so low, you would think that they would not have to be on
We can look it
the
up.
benefits for a longer period of time, because that's telling us that there's more jobs available, right?
We do maintain it. I just don't have it at my fingertips.
Okay,
We'll find
thank
it
you.
out.
And again, you did mention, hearing that we're going to see legislation that will make some programmatic changes. I assume one of them will be to increase the weekly benefit that was set in 1992, maybe. Maybe. But obviously, to do any of these types of changes, the solvency would remain a concern, and that would have to go up to accommodate the different type of whatever the benefits are that would be changed, correct?
Absolutely, and that's why it was important. It took us a while, but it was important to get this model. So now we have something, it's rough justice, but that way you can say, okay, if I'm turning this dial or that dial, what difference does it make? And
Right.
if you all say, I have 6 options, I want to do these 3, what does that look like for the trust fund? We can model it for you.
Okay. And I agree. I think when we had the pandemic, it was very important that we were able to use ARPA funds to backfill the fund and keep it solvent. And the fact that we are at level or table A is very good. I mean, we like that. We're keeping just the amount of money, the right amount of money that we need. We're not collecting any more than we have to, in a sense, right?
I think that's true for now. I do want to acknowledge part of the reason that employers didn't see a much higher tax hit was because the General Assembly put in place short-term relief, because otherwise we would have been all the way to F, and the
right.
tax rates would have been through the roof for people. So, there was a sort of a 3-year hiatus period where there was a maximum of table C. That has ended. That sunset period has ended.
Right.
And new tax rates are being issued this year. We're still doing the analysis on who's going to fall where. I will also note the Assembly also passed, as part of the PORT Act, a provision for relief to make sure to exclude that experience for direct port impacted businesses under the same thinking. That was something that could be a big hit. It wasn't the employer's fault that they were where they were. So there has been some relief built in.
Correct, and right, we held them harmless in their experience ratings. We kept them down. There's a chance that those could go back up a little bit because they're not related back to the pandemic anymore.
Right. I think it's like late 2021 is the sort of the most earliest that the experience could be coming in.
Okay, as we look to keep the solvency where it is, obviously you also have administrative costs that have gone up that you need to cap that as well too. One of the interesting things that I'm sure many of us heard while we were going through the pandemic and we're dealing with our constituents, and there was a lot of frustration on the timing it took, but there's frustration on the timing it took. One of the complaints I heard over and over again, I've paid into this, I want my money. And it's one of the bigger misnomers with unemployment insurance because the employee does not pay into it, right? It's strictly paid for by the employer. And as we're looking and moving forward with different options, did you model anything that would or could allow the employee, such as in the Family and Medical Leave Act insurance, that the employee could make a contribution to this as well too, to take away some of the burden on the businesses and make it be a little bit more jointly funded? We
did not model that, although, the models are based on the amount coming in versus the amount being spent.
Right.
Obviously, how that's distributed of the amount coming in. So in family, for example, it's still done by payroll tax, and essentially the employers are going to take it out of employees' paychecks and submit it all together.
Right.
So, obviously there could be a range of models.
So we could evaluate that if there was legislation that looked to increase the benefits to individuals, and we have to find a way to make that up through, I would imagine, a rise or a movement in tables to make. I mean, how would that be done? Would you just have to move all the employers into a different table in order to make up the difference that would be required for increased benefits?
I think if the committee wanted to take on changing the contribution levels, regardless, the tables would need to be reworked if you wanted to split it among, employers or employees. We certainly could model, whatever information you provided, but I think for the purposes of the solvency, it doesn't actually matter whether they come from the employer or employee side. Obviously, it might have other effects.
Right. Okay. I'm just thinking if we decide to go more towards the increased benefit, that obviously benefits the employee much more than the employer, if there could be some type of a modeling we could look at and see what shared costs would be on that.
I think if you have things you'd like us to model, we're happy to take a look at it.
Okay. Thank you so much. I appreciate it. Thank you. Thank you, Madam Chair.
Senator Land.
Yeah, thank you, Madam Chair. Good to see you, Madam Secretary. Had a question about just kind of unemployment insurance, I guess, claims that we're still hearing in our office. And, some of the feedback that we've heard from constituents is that they don't know the status of their uninsurance claims, that they put in a request, it's hard to get through to speak to someone live, it's hard to get the phones answered. And so, obviously we're getting less than we were during the pandemic, which is, as you know, coming in, we're getting flooded with constituents that were concerned about their ability to get unemployment benefits. But we still have folks that are waiting for a prolonged period of time, like weeks and weeks and weeks. I know that there are different time periods that people might be waiting on, depending on documentation or paperwork that they need from their employers to be able to claim those benefits. But is it possible to have some type of system where people that are filing these claims can be updated on the status or maximum length of time that they should be expecting to wait? Because we're still getting calls about UI in our office. So,
Senator, we are still not where we need to be in terms of the system, I have to say, and I have to apologize to all of you and your constituents because we are still not timely. Our current system quite frankly, which we procured during the pandemic, does not work very well. It's incredibly cumbersome. People cannot understand where the benefits are in the system. We're trying to make some, human side upgrades so that when you call a person now, they can actually go in there and fix things in your claim, which is the problem now, is it gets to someone who can't fix anything and they escalate to somebody else. So people feel very frustrated. They're calling again and again and getting delayed. But the longer term solution for this, honestly, is some serious business process and perhaps IT changes, because the current system just doesn't work well. And I think everyone knows who's tried to assist a claimant walking through those screens, it's sort of incomprehensible and very difficult. During pandemic, I get it. We had a lot of fraud issues. That's not the case anymore. We still get them, but we absolutely need to improve our processes. And some people call it the pizza tracker. Help me at least know, I know where my pizza or my package is. How come I can't understand what's going on with my unemployment insurance claim? Honestly, our own staff can't easily figure that out because the system isn't built that way, and each change takes months or years to implement. So we do need to have an overhaul. I think we're hoping, we'll talk about this with family and medical leave in a second, is that, we're taking a very different approach to what we expect from our systems. I'm happy to talk with you more about how we can better serve your constituents, because I know it's a pain point. Yeah. Go ahead.
And maybe you can give us some context here, because it seemed like before the pandemic, there wasn't this huge delay that we're seeing now. And so, granted, now the pandemic has subsided, things have kind of moved on, but we're still continuing to hear about it a year or 2 years after kind of the end of the pandemic. So, what happened there? Or why is it now permanently broken when before the pandemic, there were hiccups along the way, but it didn't seem like it would drag on for as long as it is now?
I'll say a couple things and turn it to Assistant Secretary Torres to address. Part of it was we didn't have the same system. We had a different system that we had built over many years and used. And
before the pandemic?
Yes, we switched to a new IT system in the middle of pandemic, summer of 2020. It wasn't ready. It wasn't built. And we tried to go quicker because we thought it would help. And maybe in some ways it did. But many things about it do not work. It is also our vendor really basically only supports Maryland. No other states use this system. So it means that we're not getting economies of scale or efficiencies in how it's taken on. And frankly, the fraud was just not an issue before pandemic. It would be, I lied about that I really got fired and I'm not eligible. That's what it meant. It wasn't, I stole 10,000 people's IDs on the web and I filed for them in bulk. That is a totally new problem. Have we perhaps put in so many checks in places on the fraud side that we have made it difficult? We have many legitimate claimants who say, I proved this last time. We're asking them to reprove themselves over and over and over again. And I understand that's frustrating. There are a lot of requirements about federal, fraud checks. If I might, Senator, I also want to note, I think I mistakenly did not understand, and maybe Rachel, if you want to say something about this, I think the federal UI system actually has restrictions on taxing on the employee side, the way the FUTA tax is actually set up. So maybe we need to say something about that.
Yes, that is actually accurate. Our ability to tax our employees for the unemployment insurance is based on USDOL requirements. We are not able to
do an employee side tax for the benefits themselves. I know some states do have administrative or other costs that are billed to the employee side because they're for customer service. I do want to note that the proposal we are putting in front of the Assembly this term actually would have a hold harmless provision. It would reduce the employer side tax because you can't use trust fund taxes to pay for the administrative fee. It would reduce it on the employer side as well, so that employers would not see an increased cost.
Just last question. So if you can send us a flow sheet of the process that you kind of walk through, and maybe what are some of the anticipated times in each step of the way, that would be super helpful for us, just so that we can also help direct some of our constituents to say, hey, you're in the middle of the process, you have X number of steps left. We're happy to keep tracking this for you. But I think it's also a big black box for many of us as we kind of look in the process. So, and the system is Beacon, right? Is that the system? Okay.
If it's okay, I just wanted to add a couple things in terms of because it is a bit challenging, even just what you're asking is going to be a bit challenging to kind of put together. One of the things that, while we are trying to figure out, how to improve the process flow, we've really worked to enhance more support. So as Secretary Wu indicated, one of the things that will be in place in the next few weeks is our employees speaking directly to claimants. So our employees will answer the phone and walk through the claim process and resolve the claim process with them rather than the call center. We've also increased representation at 2 American Job Centers, where UI staff is there and available, and that's been really successful in the last 3 months. And lastly, we are working to actually have the IDs validated at the local post office. We had a soft launch, so if there are any concern that that claimant has when it comes to validating their identity, they can actually go to the there's a process we're putting in place. They can we've tested it, it works very well. We had one person go through it last week, and they can actually go and make an appointment. They have a QR code where they take their post office and they are able to validate their identification. So while we're trying to do the bigger changes, we are putting measures in place to actually help the claimants move it forward.
Yeah, so if you could follow up with just a flow chart. I guess that's part of the issue, right? Just even coming up with a flow chart is incredibly difficult for you all who are in the process to be able to even convey to us, like, how do we explain to our constituents where these folks are in the process? So I guess it's a complicated process. I get it's a complicated system. And I think it sounds like we're stuck with Beacon. But, a flow chart would be helpful for us to kind of understand. So thank you.
Thank you, Senator. Senator Mouse.
Thank you, Madam Chair. I was going to ask you some questions about fraud, but since the word beacon was used, I hadn't heard that in a while, and my hair stood up. And there was one other word, but I'm not going to use that one because we're beating up on people. But, Secretary, I'd like to, since we brought Beacon up, I'd just recommend to you, there's a Maryland-based company located in my district named Clarent. They're the #1 processor for Medicare throughout the country, and they cannot get the time of day from any Maryland agency. It's amazing to me. They've got multiple offices. They do incredible work, and I think they actually tried to get with the Hogan administration, and they weren't able. They couldn't. There wasn't access there. But if you ever wanted an introduction, I'd be happy to do that for you. It's a great. They do a great job. But fraud was mentioned. And in your presentation, I didn't see anything about fraud. Do you have statistics on fraud and what's going on with fraud as far as the cases that are opening and ones that have been closed?
We do. Rachel, do you want? I can start with it. Fraud is down. During the height of the pandemic, I want to say it was 2021, we had, since 2020, actually, we've investigated 2.4 million fraudulent claims. Like, that's the volume we were facing in unemployment insurance, and it was still over 1 million in 2021. It's now down in the tens of thousands. But I think what that doesn't really take into account is all the hoops that people have to get through. So a lot of the fraudulent claims may fall off because they realize, okay, now I'm being required to validate my ID, and I'm going to step away. So I think it's an undercount. We are seeing increasingly sophisticated forms of fraud with deepfakes, with AI. So here's an example. When I first started, people said, Accenture, the Deloitte, like all the people who had worked on this a lot said, really, you have someone take a photo of themselves holding their driver's license. Like, that's really the way to show that it's not fraudulent. Well, guess what? People purchased on the dark web pictures of people's licenses, stole their photos from social media. So it was the actual person and the actual license. It's just the person applying was not that person. So that's the kind of level of fraud. We're also seeing fraudulent employers, a lot of fake employers being stood up, filing, quickly paying claims, and then filing under all the stolen ID numbers underneath. So, we're seeing those trends. It's always changing. And so we always need to be updating our procedures constantly to catch the fraud. I don't know if that's helpful. So.
It is. And if their constituent is frauded and then they need to file for benefits, they can't file for benefits because someone else has frauded their information. I may have not used the words properly, but I think you understand what I'm saying. And that's a dynamic that's come to me on multiple occasions. Is there some way to fix that?
There is a way, maybe Rachel, you could speak to the process.
We do go with, if the claimant identify that they've been, either their social security number has been previously used in the past, we will go through as long as they can provide they can confirm the identification. We are able to file the claim, work with them to file a claim to support them and correct it. And we've done a really great job at identifying many of them. We've been flagging them a lot easier, a lot faster. And more recently, I mean, you have, we've gotten some from political figures that we've seen coming through that folks are putting in. But if the claimant contacts us, we will work with them to actually correct it and get it done as soon as possible.
Because I understand that still to be a problem. It's been brought to me, and I tell you, one of the greatest story I got to share with you is an individual came to me and said we were frauded, and then we had to pay taxes on the monies that were paid, even though they never received the monies. To the extent of the problem that's out there. But I just wanted to bring fraud up and make sure that that was a priority, because I still hear about it quite a bit. And
It is still a problem. We have, I think, 17 people like dedicated to fraud alone, just working on this full time. But Senator, we are happy. We can fix it for constituents. We can fix it for employers for their experience rating as well. We can work with people. So if any of you have this issue arise with your constituents, please have them come to us. We want to correct it. Unfortunately, happened to a lot of people.
Yeah, and I had one other question. With regards to the total amount paid and the weeks paid, is there anything that prohibits the claimant from trying to aggregate their benefits? So rather than get their, request their allotment of 26, is it 26 weeks? Of 26 weeks, rather than do that, perhaps they would prefer to take a whole 26 weeks payment in an 8-week period. What would prohibit that from happening?
I mean, the structure of our law is not like that, and I think federal unemployment insurance, I mean, it requires that you be ready and available to work each week, right? So you have to be looking for a job. You have to keep recertifying each week. Look, I'm looking for a job. I had these contacts, and so the idea is, you know, you can't know that you're gonna be unemployed for that long period of time and front load it. We're really only trying to support people while they're actually out of work.
Do you know what percentage of people actually use the full 26 weeks?
I do not off the top of my head, but we can certainly get those numbers.
Because if there's a large percentage that use the 26 weeks, it would make sense to say, well, if there's 80% are using 26 weeks, then you could do it in, say, 13 weeks, and you would get an $800 benefit. Just something to consider if we're going down the road of talking about that in the future. But thank you very much.
Thank you, Senator. Senator Hershey?
Thank you, Madam Chair. And just quickly, but all this conversation about fraud brought into, not the level of fraud, but abuse, and you just maybe mentioned some of it. And that's how does the Department of Labor verify search for work requirements? And how are you guys making sure that individuals are actively seeking, and again, with low unemployment, are they getting interviews? Are they taking the right steps? Because again, solvency can be helped if we don't have people on for the maximum amount of time. We're getting them employed quicker. I just want to know, again, what the agency is doing to make sure that they're taking the active steps to get reemployed.
Rachel, do you want to say something about the
Sure.
search for work? Yeah.
Yes, so it is required as they are doing the certification, they're required to check off that they are actively searching. They're required to at least do one search and at least one search a month. I mean, not a month, a week. Sorry, I apologize. Right. Where they are verified that they have made several attempts. We have a team that do work with them to ensure that. One of the things with the system, as we were talking system issues before, is these flags that come up if there are any questionable action that reflects that they did not respond properly, or there is a concern that we need to that the one of our claim UI professionals need to look at. They will contact the claimant to determine whether it's accurate or not, and there are audits that our team does, quality assurance audit, that goes back and reviews how did we respond, how did we process them, did we do a proper search, did we confirm that the claimants did their appropriate search.
And so the requirements for what's considered an appropriate search, like you said, maybe responding to an ad or an in-person
demonstrate that, they have to
visit
demonstrate,
or
yes.
resume, those requirements are set by Department of Labor, the legislature, where is?
The U.S. Department of Labor does have some, so they have a specific requirement for.
U.S. Department of Labor,
Yes,
okay.
it does, yes.
But
And
we
then-
also have
But
some
we have some,
guidance.
yes.
And we have, so are they same with all the states, or can they be different in
They vary.
other states?
Do not know, I haven't
For-
looked at other states, but,
Do we have a report due for some of this?
Yes. Yes, they do. They do have a report, do the ghosting report. It's on, yes, we
Yeah,
do
we
have
do
a
have a
report
report.
due, and we're finalizing it, we'll be submitting it soon.
We'll see that shortly.
Yes.
Thank you. Thank you very much, Madam Chair.
And Senator, this point came up a couple of times, so I just want to interject, but it appears that the average duration in 2024 is about 17 and a half weeks for unemployment insurance claimants. You're welcome.
Okay, I have one quick question. It appears that a number of people stopped working during COVID and never went back to work. Do you have any documentation about that, and do we expect them to eventually go back to work?
actually, maybe Mike can talk about that. So I do want to note, those people actually don't show up in unemployment. They show up as falling out of the labor force. And Mike, you probably know these stats off the top of your head. I do know that Maryland was dead last in the United States in terms of the worst impact of people falling out of the labor force. The good news is we have made some progress in 2023 and 24. Mike, do you want to add a little bit more to that?
Yeah, I think that's absolutely correct. Pre-pandemic, I believe we were at 69.6% in February 2020, and we had the largest drop-off in the labor force participation rate of any state. During the Moore Miller administration, we've had, I believe it is the 13th best increase in the labor force participation rate. It's increased by about 0.8 percentage points. Currently, our labor force participation rate, it is still high. So we are at about 65.6% as of November 2024. And that is about the 14th best rate in the nation, I believe. The reason you can kind of square those two numbers of the largest drop and the 14th best is that pre-pandemic, we were at the 4th best labor force participation rate. The reasons for the drop are varied. During the middle of the pandemic, through about 2021, 2022, a lot of the story appeared to be women between the ages of 25 and 54 dropping out of the labor force. There were potential issues about childcare coming in there. 2023 data kind of muddied up some of that story, and there appeared to be a large increase in the labor force participation rate for some of those workers. And now what we've really seen has been a drop-off, especially among older Marylanders, those over the age of 55, those retired. There have been a lot of workers who retired and then stay out of work. Pre-pandemic, there was traditionally a trend where people would retire, they would stay out for a couple of years and then decide to come back into the labor force. And that re-entering into the labor force has not happened pre-pandemic or post-pandemic. But we've also seen a dip among younger Marylanders as well. It's kind of been across the board, and I think there are different reasons for that, whether that's increased schooling for younger Marylanders, barriers to work or mismatches with skills, which obviously our department is very focused on, as well as for older Marylanders, just perhaps they've had enough wealth accumulate through stock market increases or home equity, and so they're able to retire rather than look for another job. But again, I think one of the big things we've been looking at is a recent uptick for Maryland that has been very strong, and so we're very encouraged by that.
So the uptick is that some of those folks that fell out of the labor market are now coming back finally?
Yes, that's correct. Yeah, we've
We don't
increased
really-
our labor force participation rate in Maryland by 0.8 percentage points relative to January 2023 when the administration took office.
Thank you for that. Do I have any other questions for this briefing? No. Thank you very much. The next briefing, Secretary, if you'll stay with us, and then Ms. Verk, Commissioner Verk for the workplace fraud. Thank you.
Okay, I think we have slides on this as well. I think they might all be together. Want to just advance that? Sure. There we go. Oh, all right. All right, I'm joined at the table now by Commissioner Virk, and I realized at the start I meant to say hello to our new Vice Chair. This is my first time appearing before the committee, so thank you, Madam Chair, for having us, but also Vice Chair Hayes. It's a pleasure to be here with you today. Next, we're turning to workplace fraud, and I'm going to turn it over to our Commissioner of Labor and Industry, Commissioner Devky Virk, in a moment. But I did want to note that we have, a number of things that we have been working on. In particular, we have a joint enforcement task force that was set up in recent years by the governor, and it was renewed by Governor Moore. And I want to talk a little bit more about that. But most importantly, and can you go to the next slide, Devky? We wanted to focus on the Workplace Fraud Act really undergirds the underpinnings of Maryland law and how we deal with this. I mean, many of you know about worker misclassification, where workers are not appropriately classified as workers. And what that means is, unemployment insurance tax isn't being paid, family and medical leave won't be paid. They're not covered by discrimination or harassment laws. Minimum wage and overtime doesn't apply. So there are many important ramifications of this. I'm going to turn it over to Commissioner Virk to talk through some of the specifics of the Workplace Fraud Act in Maryland, and also our enforcement of what we're doing. So with that, Devky, I can turn it over to you to talk about the law and some of the details. Thank you.
Sure. Thank you, Secretary Wu. Members of the committee, thank you for having us here. As the Secretary noted, the Workplace Fraud Act is a Maryland law passed by the General Assembly in 2009. And what it does is make worker misclassification itself an independent violation of Maryland law. When an employer misclassifies an employee, or someone who should be an employee, and calls them an independent contractor, or simply doesn't classify them at all and pays them cash, say, under the table, off the books, that action may violate other laws like unemployment law or tax law or workers' comp law if they don't have appropriate coverage. But what the Workplace Fraud Act did, what this General Assembly did by passing it, is sort of bring those threads together and create worker misclassification as an independently prohibited matter under the law. And it applies, the scope of that law is quite narrow. It applies only to the construction and landscaping service. And there are, it's too complex to go to in great detail here, but I'll just hit on a few high points. In addition to the scope itself, there's a distinction that the law recognizes between non-knowing, inadvertent violations of the law and knowing violations of the law. I think there's a recognition, and was a recognition by the General Assembly, that some employers classify their employees as independent contractors because perhaps that's how they were classified when they came up through the construction industry or the landscaping industry. Perhaps that's what they see others doing. Perhaps that's what they know. And it is not an intentional effort to avoid application of, minimum wage, overtime, workers' comp, or any of the other legal protections that workers have by reason of being employees. So that's considered a non-knowing violation, and that's distinguished in the law, both in terms of process and penalty, from knowing violations, which is quite a high bar and really indicates an intentional effort to avoid applications of the law. What the law says about a knowing violation is that it has to be done with actual knowledge or deliberate ignorance or reckless disregard of the law. And the citation and the penalties for that in particular are higher under the Workplace Fraud Act. This law is enforced by my division within the Department of Labor, which is the Division of Labor and Industry. There's a citation process and an administrative hearing process. And this slide is intended to sort of, at least in general terms, outline our investigative process on the one hand, and then the process of the citation and disposition of the citation on the other. So just quickly, our investigation process, our first step really in opening an investigation is to contact the employer to request information from them and records from them about who the individuals are, what sort of work they performed, and what the terms of their employment or their arrangement is with the business. We then review those records. We follow up as needed. You'll see I attempted to make arrows going in both directions to show that it's an iterative process. Within 90 days after we receive all of the information we've requested from the employer, we have to make a citation decision. We either cite if we find a violation, or we have to close the investigation. And that's a deliberate effort, I think, on part of the General Assembly to ensure that employers don't have this process hanging over their heads needlessly. If a citation is issued, there is a process by which an employer may file a notice of contest, and if they do, there's a hearing, and the law provides that that must happen within 90 days. An administrative law judge issues a decision, and there's a full appeal from that decision. If they do not choose not to contest, the citation itself becomes a final order of the commissioner. But again, noting this distinguish between different levels of intent and different behaviors of an employer, if an employer complies with the citation and with the order and makes it right within 45 days, there is no civil penalty that may be assessed. So if they pay unemployment, if they say W-2 their employees, if they pay or promise to pay their back taxes, if they ensure that they have appropriate workers' compensation coverage, and if they make the workers whole for any losses, save overtime or other restitution, if they do that, then there is no civil penalty that attaches. Do right going forward, and you will not be fined. That's the message of the law. And really, that's the intent of the law as a whole, is to achieve compliance. On the other hand, if an employer ignores the citation or fails to timely comply, in that case, a civil penalty can be assessed. I want to talk a little bit about what our enforcement of the Workplace Fraud Act looks like today. And the context for this really is, as I think can be shown by the chart, is several years in which the act was not robustly enforced by the Division of Labor and Industry. We are rebuilding this unit. There were, I believe, 2 investigators, only one of whom was active at the time that I became Commissioner of Labor and Industry. We have now requested and received 5 additional PINs for this unit specifically in the budget that the General Assembly approved for the current fiscal year. And we are hiring for those positions. So as a consequence of that incredible effort by my entire wage team, you can see the turnaround here. We are actively visiting sites. We are interviewing workers, 1,687 workers in calendar year 2024 that just ended. We've initiated over 180 investigations. We found 199 misclassified employees, and we've made over 200 referrals to our sister agencies who are also concerned with worker misclassification. Out of those 185 investigations, we've issued 29 citations. We are, as I said, our aim in this law is really to achieve compliance on the front end, and to make the same distinctions that the law does between knowing and non-knowing violations. All of those 29 citations have been for non-knowing violations by employers. And employers, by and large, when they receive the citation, their first question to us is, what do we need to do to make it right? And we are grateful for that request and inquiry, and we have a process by which they can work with us to ensure that they do make it right for their employees, for the state of Maryland, for the Unemployment Insurance Trust Fund, and for the business community who is complying with the law. I just want to pause for one moment, although this is not specific to workplace fraud. The uptick in activity that you see in the workplace fraud area is very stark, but it is reflective of the uptick in activity that we are experiencing in labor and industry in many of our programs. For instance, in the Prevailing Wage Program, which oversees state-funded construction contracts, as you can see, in FY24, we recovered over $1 million in restitution for workers. That's going into workers' pockets. And that is more than the sum of the previous 3 years combined, and then some. And in FY25, as of last week, we had already recovered $875,000. So we're on track to exceed our FY24 numbers, this year. I will say that's a double-edged sword because it certainly shows that there is wage theft that is happening on state-funded construction sites. But if we don't go out there and try to find it and try to make it right for those folks, they will continue to be underpaid. So we are working very hard to try to work on enforcement in all of our areas. And similarly, our wage payment and collection work, as you can see, again, that number, the number of claims that we've had has gone up. The number of audits that we're conducting, when somebody calls us to say they're not getting properly paid for overtime, we look at, it seems likely to us that it's everybody who may not be getting paid properly for overtime. So we do an audit. And again, our focus here is on trying to make it right and maximize really the use of our resources in every way we can. Sick and safe leave, I just want to note, we opened an electronic portal by which the public can file complaints with us. And as you can see, the number of sick and safe leave complaints that we've processed has really doubled since that happened. I believe that was in late 2023. So you'll see the FY24 numbers, are strikingly larger. Again, we're just on track in every area to exceed what has been done in the prior years. And really, I just want to give a tremendous shout out to the new wage leadership that we have at Labor and Industry and our entire wage management team and all of our investigators. I think we're just beginning to use the tools that the General Assembly gave us. And really, it's just making a difference in the lives of hundreds of workers, maybe thousands of workers by the time we're done.
Actually, Deputy, I'm sorry. I'm going to jump back in here because I think I was supposed to say some things about the Joint Enforcement Task Force at the top, and I forgot. If you don't mind saying a couple things.
It's the perfect
slide, exactly. In addition to the awesome little puzzle pieces here. I did want to note that, I mentioned that Governor Moore had reconstituted the workplace fraud, the Joint Enforcement Task Force on workplace fraud at the beginning of last year, so a little over a year ago. And this really shows how it brings together a lot of the key agencies. Workplace fraud really manifests itself in a lot of different places. It hurts workers, as I mentioned earlier, that don't have the protections. It also hurts employers who are following the law and complying with all these requirements. It also hurts the state and the public fisc because it means that taxes aren't being collected, our laws aren't being complied with, and it means that, social insurance programs are not being funded. They're only being funded by a portion of employers or businesses. Not all businesses who should be are paying in. So a key part of the work we've done over this year, and as in my position at Labor, I chair that task force. It's been a very engaged group. We've had a lot of work together with all of the agencies. And as I know, our report is forthcoming. It should be out in a couple of weeks, so we look forward to sharing it with you. We did a lot of stakeholder meetings, gathered a lot of information, and started working also on collaborative enforcement. So I just wanted to note that that's what we've been up to. We're happy to provide that report later. And I think we have a couple of other slides talking about the activity here. The next slide.
We do. I think the reason why there are puzzle pieces here is because each one of these agencies, as we see it, has a piece of the puzzle. Each one has different interests in the workplace fraud problem. Each one of them has different tools with which to address it. Each one of them has different information. And before the executive order and the establishment of the task force, really all those pieces were like strewn all over the floor. And the task force is intended to sort of pick them up and try to figure out ways that they can fit together and streamline and work collaboratively on this problem. Because in addition to being a problem for individual workers, et cetera, and a problem for the state and the state's trust funds, it's a problem for business standards. It erodes the business standards and the labor standards in the industries in which workplace fraud is unfortunately becoming more of the norm. And certainly back in 2009, the General Assembly identified two industries along those lines, construction and landscaping. And unfortunately, as my prevailing wage investigators go to state-funded projects, they see worker misclassification on those projects. They see people being paid under the table. They see people being 1099'd improperly. And that is with state funds. So I guess what I'm assuming is that if that is happening on the most heavily policed projects that we have in this state, it is probably very likely happening at an even greater frequency and an even greater level at other projects as well. And that's unfortunate. So it's an erosion of the floor of our entire system of labor standards. And that's one of the reasons why this task force is so important. We have convened a group of enforcement staff amongst all of the agencies who work on this, and that's everyone. I should go back to the previous slide. Occupational and professional licensing. A number of companies, particularly in the construction industry, have to hold occupational professional licenses. The comptroller, of course, has an interest on the tax side. Workers' compensation, the Maryland Insurance Administration, unemployment, of course, the Office of Attorney General, who has False Claims Act and Consumer Protection Authority, as well as, of course, the ability and authority to work with all of the agencies on litigation, and the State Department of Assessments and Taxation, which is the first stop for many businesses when they're trying to register. So we're developing relationships between the staff. We're referring cases to sister agencies. We're information sharing at the investigator level. And I think most importantly, we're streamlining our enforcement processes. Why should 3 different agencies investigate the same matter when they could simply build on the work of one agency who takes the lead? These are the kinds of things we're working on, and they are already showing a level of results. I put an example on here. Our unit cited an employer for workplace fraud, and that led and referred that matter to UI. UI audited. That audit resulted in the discovery of additional misclassified workers and over $1.7 million in wages that had not been reported to unemployment. And we expect results like that will happen more frequently as the collaboration grows stronger. And that's really where we're going, is full interagency collaboration. Secretary, did you want to say something about this?
No, I think that Commissioner Burke has already touched on it. It is really making, especially in a time of constrained resources, we have to be coordinated. And frankly, it's also not fair to employers or workers if they say, well, I told my story to this agency and now I'm hearing from another agency, or I had this one problem, I didn't realize I had to go to some totally different place to get a different problem resolved. And as I said, it's, it also makes sense for employers who are complying with the law. It's frustrating for them when they say, well, you dealt with this tiny little part of the problem, but you just squeezed part of the balloon and the problem went over here. You didn't address the problem in a more holistic way. And so I'd say, our last point of sort of where we're trying to go, I think there's, we'll
get there eventually.
We're going forward ahead even more quickly than we thought. As I mentioned, you will have the task force report in a couple of weeks. These are some of the areas we're really focusing on based on all the conversation and stakeholder engagement we did. And of course, we welcome more input from the committee, from other members of the General Assembly. There are going to be a number of recommendations or areas for activity that you are going to see. As Commissioner Burke noted, coordinated enforcement is critical, right? That interagency collaboration has to be something we're going to do. And, I'm sure there will be legislation trying to touch on a number of these pieces, making sure that we, ensure that there are strong consequences for knowing violations, especially when there's state contracts and state dollars involved. Like we bid those contracts assuming the law was going to be complied with, right? That's built into the price, is paying people in accordance with our laws. If that's not happening, that means the state is the one bearing the risk, or other public entities. And so making sure that people really comply with that or bear the consequences, providing accountability up the chain, providing incentives for workers to come forward, and of course, educating people across industries, but particularly in industries where there are risks. But like I said, we do have already strong tools at our disposal. We believe there could be others, but making the best use of the tools we already have through that coordinated work is absolutely critical. With that, we're happy to answer any questions.
Thank you, Madam Secretary. I'm trying to figure out this chart on page 18, enforcement of workplace fraud. Citations issued were only 29, and you thought none of them were really aware?
Yes, as I said, the bar for finding a knowing violation is very high under the law. There has to be proof of actual knowledge. or reckless disregard for the law. So there are regulations that identify what kinds of factors our investigators might look at. Certainly, repeat violations would be one of them. We have not seen that yet. But then again, we've really only been enforcing this law for a little under a year. And I would certainly hope we wouldn't see repeat violators within a 12-month period. Things like if they used to classify workers who did the exact same kind of work as W-2 employees and pay UI contributions on them, withhold taxes properly, and then they stopped doing that, that could be an indication of a knowing violation, but we have not seen that as yet.
Commissioner Burke, have you worked at all with UEF, the Uninsured Employers Fund? Do you see how many claims they handle a year? I'm just astounded at this number. I was an insurance agent for a long time, and I insured a lot of general contractors and subs, and I can tell you I could find more than 29 in a year.
Yes.
So I'm just a little concerned that that's all we have found, and we've issued citations, and you're saying they didn't know. I think contractors know when they have someone sign that form that relieves them from workman's comp insurance, and they can't even sign their name. All they can do is write an X. I would suggest that one of the agencies you add is UEF.
Yeah, we certainly are working with the workers' comp. Your points are well taken. There are many potential sources for Workplace Fraud Act enforcement. We have begun to skim the surface of that in this last year as we have really been building this unit from scratch. Certainly, we've had conversations with the Maryland Insurance Administration, and we've had conversations with workers' compensation as well. And, I won't get into all of the challenges of interagency data sharing, but it is to say that we are working on a data sharing agreement or a set of data sharing agreements that would allow for the kind of two-way street that you're talking about so that we could get those inputs and everybody on the task force could get those inputs and then triage those to determine, how many leads to follow and which were the most fertile ground.
It's just a tremendous amount of loss of opportunity to the state government and to other contractors who are operating legally, and they're losing contracts to these contractors that are illegal. It's very difficult in the business world also. So I encourage you to ramp up this agency and work within the agencies, and let's find more of these people that are not operating legally. Thank you.
We will do that.
I don't know who was first. Senator Ellis, you want to start? Thank you.
Yeah, thank you, Madam Chair. Thank you, Secretary and Commissioner. One of your charts talked about different leaves and issues with that. And one term on the chart was safe leave.
Sick and safe leave.
I'm sorry? There was
Sick and safe leave?
Sick and safe, right. What's a safe leave? I'm not familiar with
So
that.
that's the Healthy Working Families Act, which provides leave for victims of domestic violence. That's the safe part of the sick and safe leave.
Okay, so they go together, sick
They
and
go
safe.
together.
It's the paid sick days law that Maryland already has right now, but it includes time off, taking time off for dealing with domestic violence.
And that's a federal law?
It's
Or-
a state law.
That's a state law?
It's a state law.
Okay.
All of these are state laws.
State law, okay.
Yes.
Okay, great, thank you. Thank you for that clarification. Second question. So I'm aware of unions suing contractors for misclassifying employees and winning major, large judgments. And I'm curious, why do, unions as private actors have to do that, those lawsuits and not, say, state? And I heard you keep saying on state projects. So these misclassified workers were on local county projects. Is there a bar in the law that prevents labor state from taking up for those workers?
No. The misclassification law, Senator, addresses construction in the state of Maryland, regardless of the funding source. So misclassification on any construction site is our concern. There is a private right of action under the workplace fraud law. And again, as I noted, we are only recently have rebuilt this unit, which was really, as you can see by the previous figures, simply not operating for a number of years. But there's no bar to us taking matters regardless of the source of funding, so long as it's within the scope of the law.
Okay, oh, so those low numbers were due to lack of action by the state. And
Oh.
what years were those lack of action where the laws weren't being enforced?
Right, so 21, 22, 23, might have, I only went back a few years here, but starting in fiscal year, halfway through fiscal year 24 is when I came in as Commissioner of Labor and Industry. And the former head of the workplace fraud unit resigned about 4 months after I got there. And that is the point at which we began actually rebuilding the unit. There were no processes, there were no protocols, there was no intake system, there was no investigation. There was simply no activity that was happening at the time that I got there. Okay. So the work that you see in the calendar year that has just ended, I certainly agree 29 is not the number where that's nowhere near the potential of the number that we could have, but it is the number that we have, again, based on 1 year's worth of rebuilding activity.
Okay, so the laws existed for you to be active in that space, but was a decision made at what level not to do anything?
That I don't know. That is before I got here. I can only tell you what the numbers show and what I found when I got there in May of 2023.
Senator, I think, with this administration, we've had, obviously the worst pandemic and many other factors influencing what's going on. But I think I can't speak for prior administrations, but I think we have a renewed focus on that with bringing Commissioner Virk in, with the governor's executive order, that we really do want to focus on these issues. We want to find where there are violations. We want to bring people into compliance.
Okay. So thank you. So what you're saying is this administration is focused on enforcement.
Absolutely.
But was not
and compliance and compliance, right?
So it didn't happen before because previous administrations did not do it, even though the laws were there.
I think much more could have been done. That's for sure. And
well,
we are trying to do
this,
more.
Nothing was done.
Right. I mean, I
zero.
recognize these years we were in some extraordinary circumstances, but I'm sure if we went back further, we would see, that we just didn't. Part of it is we are building up the unit. Getting, thanks to the General Assembly support, getting more resources, more pins, actually focusing on workplace fraud, and I would say workplace enforcement generally, because it doesn't always walk in through a workplace fraud door. Maybe we hear about it through prevailing wage violations or somewhere else.
Yeah, so the reason I'm asking questions is to see if the law is kind of too weak, which allows a new administration coming, so we're not going to enforce this. If the laws need to be strengthened where some new administration can't come in and say, I'm not going to do enforcement, because this is a huge issue. Do you have any guidance with that?
Thank you, Senator. I think it's important to have the tools and, frankly, to do the work, because I think it demonstrates the outcomes, right? In part, it is like having the people there, having the laws in place. Are there additional tools that we could have? Certainly, and I think you'll see that in the task force report. I think one thing that's important, though, is also, it is that coordination. What we don't want to have is duplication, where we're having sort of multiple agencies trying to accomplish the same thing. That can be confusing, certainly for employers, and it's not necessarily the best use of state resources. So it's ensuring and trying to put the structural things in place so there's real incentives for contractors of all kinds to comply with the law, as well as disincentives or actual penalties when people are not complying.
Thank you for your answer, ladies. Mm-hmm. Thank you, Madam Chair.
Thank you, Senator. Senator Guile.
Thank you, Madam Chair. Thank you, Madam Secretary and Commissioner Virk, for this presentation. I wanted to go back to that high bar that you mentioned earlier for the citation. And I'm looking on the page that has this Workplace Fraud Act process, and it says citation, non-knowing violation.
Right.
I assume then there's another process then for a knowing violation, or?
It's the same process in terms of if a citation for a knowing violation, employer still has the opportunity to contest. There's still a hearing process. There's still an administrative law judge decision and an appeal. What's different in a knowing violation is that there is not an opportunity to make it right and have no civil penalty.
Okay.
If in a knowing violation situation, if we meet that bar, it's determined that you know. And if you know, then there is not the relief from the sanction that is provided to a non-knowing violator. So that blue line that you see in the middle, that doesn't exist in the
There's like an
knowing
opportunity to cure, to correct.
Exactly.
So on the page, with the data that you have then, with the 29 violations, that doesn't distinguish knowing and non-knowing violations, does it?
It doesn't, but they are all non-knowing violations.
Those are all non-knowing violations. So when you said earlier that the bar is high, have there ever been any citations issued for knowing violations? It sounds like none.
Ever in the history of the unit, I can't speak to, not in this year that we have been rebuilding and beginning to enforce the law.
Is the standard, is it just simply knowing, or is it knowing intentionally, maliciously, or is there something else to it, or is it just knowing?
It's knowing, and there are, again, sort of three general ways in which you can meet it, like actual knowledge, reckless disregard, and, I can't remember if the third is plain indifference, but.
I'm sorry, you said, is it intentional disregard or just reckless disregard?
I believe it's reckless disregard.
Okay. And then you mentioned this appeals process. Who has the right to appeal?
I believe either side in administrative process has the right to appeal.
Either side is it the agent, does the worker, or does the person, I guess, that's making they have an opportunity to appeal?
They could, that I don't know. We have, one of the problems in enforcing workplace fraud is that most of our cases are not built on information that is obtained from workers coming forward to us. Many workers who are misclassified, in fact, I believe, I want to say that none of the cases that we've investigated have been initiated because of employee complaints. Generally, what we have found is that workers who are misclassified, including workers who are paid under the table, are reluctant to come forward. They may fear losing the job that they do have if they cooperate with us. So most of our, I do think in one of the policy suggestions that the Secretary noted on the last slide here is providing some level of incentive for people to come forward. And that is because in many workplace fraud situations, people are paid higher than, say, minimum wage or higher than a certain rate, essentially in return for being 1099 or paid off the books. And so as a consequence, in many cases, there is not direct restitution to the worker. So the restitution and the remedy in workplace fraud goes to the general fund with a penalty, or it goes to the taxing authorities through revenue reimbursement by the employer, or it goes through the UI fund to make the fund whole for unemployment contributions that should have been paid. But where it doesn't go as a general matter is to the workers themselves, even though they may have been deprived of overtime, right? Even though they may have been deprived of sick and safe leave, even though all of these things may be true, if the worker does not cooperate, we cannot help to make them whole because we will not have records of the number of hours that they worked, right? Or we will not have in most cases, reliable information around that. So there's not money coming to the worker in their pocket from a workplace fraud violation. And that is a great disincentive, that together with any number of other factors that puts people in a position where they feel that they have to accept a job where they're paid under the table and where they are misclassified. You put all those things together and you have a system in which it is unlikely that people will come forward without some incentive. And some other states who do have laws like this pay a certain portion, of the fine or provide, again, a clear monetary incentive to workers to assist with investigation and to come forward.
So some other states provide some incentive to the worker to do so? I'd be curious to know what other states do, and if that's possible.
We can.
And just one more question. How many investigators? Maybe this was already provided, but how many investigators do you have?
We started in 2024, at the beginning of 2024, with 2 investigators, one of whom was on long-term leave. So we had 1 investigator in the workplace fraud unit. 1, yes.
1 investigator.
1 as in 1 single.
Well, that may explain also some of these lower numbers.
Yes.
Okay.
We received 5 new PIN, we requested and received 5 new PINs specifically to enforce workplace fraud in the budget for FY 2025.
Okay.
We received approval for that. We have started hiring particularly bilingual investigators because well over 70% of the people we interact with, both on the employer side and on the worker side, are Spanish speakers.
Yeah.
So we have made a commitment to hiring bilingual investigators. I believe we have successfully hired 4, again, through the latter half of calendar year 2024, and we have 1 vacancy left that, Lord willing, we'll be able to recruit for any day.
Okay.
So, yeah, we certainly do expect and hope that the numbers will go up. And I think most of all, what we hope is that compliance will go up. One of the takeaway that at least I've had on the enforcement side from the task force is that working together collaboratively is one of the greatest tools we've got. Okay. If we look at the prevailing wage data here, those tools all existed. There were some investigators who were on staff, but when we actually start doing the work with the tools we even have, look at the results here. Mm-hmm. And that's just literally picking up what's on the floor. That's not really going after this work strategically, which is the next step that we're hoping to, right? Again, to maximize the effectiveness of what we're doing, we need to find where the most likely places are that there are violations and target those.
Yeah.
And that's, again, that's very, very far from what was done I think for several years before I got there. But that is what we are looking to build within the unit for the future.
I'm sorry, just one more question, Mr. Vice Chair. On the chart where it says referrals made to sister agencies,
Yes.
This is 243. Do you have information as far as the outcome of those referrals?
We have anecdotal information, like on the UI side, the example that I noted on this slide, page 22, is an example of one specific referral that resulted in, the finding that you see here.
Yeah.
I do expect that a number of our other referrals have also triggered audits, either by the comptroller or by UI or both. Unfortunately, until we have an information sharing agreement in place, it's my understanding that the specific details of the outcomes are not is not information that can be shared with labor and industry. We are working on that as well and hope to have a more fulsome information sharing agreement in place.
Okay, thank you very much. Thank you, Madam Chair. Mr. Vice Chair?
Do I see any other questions for this presentation? Okay, thank you very much, Commissioner Burry.
Thank you.
Finally, presentation from Department of Labor, Family and Medical Leave Insurance, Secretary Wu, and I think you're going to bring up Elliot Scherer.
Yes, that's right. I'm going to be joined by Assistant Secretary Litzker. So being mindful of time, we wanted to provide an update on the Family and Medical Leave Insurance Program. If you go to the next slide, Elliot, we're just going to go through an overview on how Family's going to work, some areas we're going to work on, and how we can work together with the committee. Next slide. This is an overview of Family and Medical Leave. I'm going to turn it over to Elliot to talk more about this, but I think this committee is fairly familiar with the basics of the program, so we're going to go through those pretty quickly and then get to where we stand with the timeline and the work. So with that, Elliot, I can turn it over to you.
Sure, happy to. Thank you, Secretary. Thank you, Madam Chair. So just as a reminder, Family and Medical Leave Insurance is an insurance program. That means employers and employees contribute into a fund, an insurance pool, and benefits are paid out of that centralized trust fund. The family system is designed to provide maximum flexibility to employers. And so I'll walk through what this means. At a high level, it means that employers have 2 main options. They can participate in what we call the state fund, which is making contributions into a fund administered by the Maryland Department of Labor. And the second option is to obtain a private insurance plan. And there's two sub-options there. Under either scenario, workers or every employee in the state will be able to take leave and receive job protection and wage replacement from either the state fund or from their employer's private plan. So the first of those main options for employers is to participate in the state fund. Under this scenario, employers will begin payroll deductions from their workers in July of 2025 and remit those contributions in October of 2025. What we're doing during this build-up period, we're establishing our digital systems. We are working, again, to make this easy for employers. We're working with third-party administrators who will then work with their client employers to maintain compliance with the program. The Department of Labor is establishing secure banking capabilities and integrating our digital and financial systems. This may sound like a pretty simple process. Employers begin payroll deductions and employers remit payments. But I want to assure you there's an immense amount of work that this entails and that we've done so far and that remains ahead for us. The second main option that I mentioned is that employers can obtain a private plan. And so this is that they would not participate in the state fund. They would not pay into the state fund, but instead they would obtain a private plan. There's two options within this option. The first is to self-insure. I'll talk a little bit about what that means. And the second is to obtain a plan that's sold in the private insurance market. Under either of those options, under this scenario, employers begin to indicate their intent to obtain a private plan in May of this year. That's a process that we're calling a declaration of intent. And what that allows employers to do is to not remit their first quarterly payments to the state fund in October of 2025. In January of 2026, we are intending to open the process for employers to apply to self-insure to the department. And then in spring of 2026, employers that want to obtain a plan on the private insurance market will be able to do so and provide proof of coverage to the Department of Labor. During this whole process, as you can imagine, we're working closely with our sister agency, the Maryland Insurance Administration, to establish the requirements for the private insurance market. Just like under the state plan, employees will be able to receive benefits in July 1 of 2026, paid by the private plan. Of course, all of this is working towards the main goal of this program, which is to provide job protection and wage replacement to employees who have a qualifying event. And under any scenario, in July of 2026, under current schedules, employees are scheduled to be able to receive benefits. Three areas of focus for us as an agency that I just want to draw your attention to: the work that we've done to date since the Family Division was created in the Maryland Department of Labor in April of 2023. The first is looking at educating employers and employees throughout the state. We know that the success of this program hinges on ensuring that workers and employers understand their rights, roles, and responsibilities. It can't be a success without that. And you can see here our efforts to date. We've held more than 80 events. We've reached over 10,000 attendees across the state. We've been on main streets across the state. We've also brought on a communications and marketing vendor to help us expand that reach to the 2.5 million workers and 180,000 employers that will be covered by this new program. In the spring of this year, we're expanding that into a full-scale marketing campaign in order to reach employees and employers statewide. Second area of focus for us is investing in customer care. We're building a dedicated customer care unit within the Family Division of the Maryland Department of Labor, to take calls and to provide direct support to employers and employees, specifically on the topic of family. We're also creating an employer services unit to meet the specific needs of employers. And of course, as the Secretary mentioned earlier, we're developing a modern online self-service way for employers and employees to interact with us online and trying to learn from past mistakes. Finally, an area of focus for us is building a responsible and sustainable program. And what I mean by that is first investing in fraud and cybersecurity protection. We're working with our sister agencies to make sure that we have systems in place to combat fraud and cybersecurity. And second, we're devoting a lot of attention and time to accounting, financial management, and fund stewardship. We're getting top tier accounting, consulting services, and engaging actuarial services to help us make sure that the fund is sustainable long term. I'll turn it back to Secretary Wu.
I did want to note, first of all, thank you to the vice chair and all the members of this committee who have been very engaged on this. And Chair Bidle, this is a really important program, and we know I didn't go into the benefits because I think you know them well, but it's important for Maryland workers as well as businesses, and as was alluded to earlier, keeping people in the labor force. Like, it is very clear Maryland's made some great strides in the last couple of years returning from where we were pre-pandemic, but it is obvious, as we have an emphasis on growth, having people in the labor force is critical to our economic competitiveness, and family and medical leave is a big part of that. We see in other states that have had this program or among private employers, paid leave helps keep people in the workforce. That impact is particularly noticeable, especially among women who tend to be caregivers more often, especially of women of young children. So it does have a very important piece in the discussion right now about how we can grow our state. I do want to note we have had some challenges over the last year. I think last year when we asked for an extension of time, I was asked, like, is that enough time? And I said, well, it is, as long as we don't have any sort of major unforeseen events or a lot of procurement challenges. We've had both. That said, the agency's plan is still to complete the program. We may need to use some administrative flexibilities on the current timeline. However, we understand there are other conversations and there are certainly other views about the best way to tackle this. But the plan that Assistant Secretary Scurry laid out is on the current statutory limits. There is, and the next slide, we just wanted to note, we do have a bill to take on the self-employed enrollment process later. It's obvious to us that it's very complex and there's low uptake in the states where it exists. So our thinking is, let's focus on the main parts of the program, kind of more standard employee-employer relationships. Getting those right, getting that information out to employers is a huge undertaking. And so we are going to focus on that, and our proposal in our legislation is to provide more time to tackle that piece. And with that, we're happy to answer any questions. Oh, I'm sorry, I forgot about this, but we can talk more about that. I mean, we really want to make sure that we're getting the word out to your constituents and supporting businesses and workers in your communities.
Thank you, Madam Secretary. Let me start with a question from Senator Hershey.
Thank you, Madam Chair. And Elliott, Secretary, thank you. Just a couple questions. You set the contribution rate at 0.9% of covered wages, and under the program, it's split 50-50 between employees and employers. Speaking that, we've already talked about unemployment insurance. On the state plan, where do those contributions go?
They go into the trust fund. And I will note, for small businesses, they don't pay the employer side. Right. Under 15, correct. They only pay that.
So they go into a trust fund?
Yes.
Right, okay. When you mentioned there's other options, you can self-insure or use a private plan, right? If you take either of those options, is there any contributions going into the trust fund from those two options?
No. Last year during legislative session, we made sure that there was a small administrative assessment to cover the administrative costs of the department of enforcing those requirements that employers have a private plan, but there's no contributions that go into the trust fund.
I mean, it's not the regular percentage tax fees. It is the assessment. There is an assessment.
It's a straight small dollar amount between $100 and $1,000.
So let's say that a number of maybe large employers decide to use a private plan, or groups. Maybe I understand that the boards of education are looking at maybe pooling together and doing a private plan of some type, or at least a third-party plan. Other groups may just self-insure. Again, larger companies may self-insure. Are there going to be questions about the solvency of this trust fund if there are other options that are not having people participate in the state plan, or employers participate in the state plan?
So the fund is designed to be self-sufficient, and so incoming revenues have to match outgoing benefits in order for it to be a solvent trust fund. The current 0.9% rate that was set last year is set based on the assumptions available at the time. Those assumptions looked at experience in other states about the kinds of experience that they've had with private plans. But the truth is that at this date, we don't know what that behavior will be from employers, which is why, as I noted on an earlier slide, we are getting actuarial support in order to be able to try to model that. In May of this year, that's the first time employers will indicate their intent to get a private plan. And that is before contributions would start and long before benefits would start. And so there would be time to adjust if needed. But on the whole, if fewer employers are participating, that means fewer of their workers are drawing from the trust fund. And so generally the fund should balance, but there could be scenarios where we need to adjust the rate based on solvency projections.
Okay. Earlier, this committee had a budget hearing this morning, and again, while I'm certainly concerned about the employers and employees' contribution being forced to pay into the fund, obviously the state and local governments have to do this as well too. What of the three options, what is the state of Maryland going to do?
Senator, DBM is going to make that ultimate call. So we are working with them to support them. I understand, one of the active conversations could be, they could self-insure, the state could self-insure. We certainly expect that, when people do that, for example, they may pay the full benefit, like full wages. Family insurance only provides partial replacement. So there are benefits to that. And also people can run it through payroll. And we expect we may see some large employers that may or may not include the state or other large public entities. They have the option to do that under the law. I'll leave it to DBM to sort of make the final call announcement, because obviously that would have to be part of negotiations, part of budget, other things as well. So.
Well, I think that's the concerning part. Obviously, it would have to be part of this budget if the contributions are set to take place on July 1st of this year. Explain then what self-insured is. I mean, it seems a little bit like a way of backing out of this. I mean, you're not forced to be into the state plan, and you don't have to show, some type of a document that says I have a private plan. What is self-insured? And if the state may look to go to that, what type of requirements are going to be put on the state to make sure that they're adhering to the policies?
Yeah, the law basically just says employers have the option to self-insure. And through regulations, we've built out what that would look like. We took the term insure seriously in that we expect that employers will create a pool because they are still allowed to take payroll deductions from their workers, from their employees. And we wanted to make sure that those funds were respected, that employers couldn't just maintain the 0.45% deduction from their employees and then have no accounting of those funds, because the intent is to pool them and then pay funds when a worker has a qualifying event. And so we've developed regulations about what steps an employer needs to take to prove that they are in good faith setting up a self-insured plan with rules and with accounting to meet those requirements. So that's in our published regulations. Further guidance would come from us. Again, I mentioned the current timeline is January of 2026 is when employers would submit their applications to self-insure. And so before that, we would give even more specific guidance to exactly the steps that an employer would need to take. But it does involve creating plan documents, rules about how your employee would submit a claim, what you do when you receive a claim, how you handle disputes between employees, between an employee and an employer about a claim. So it's not as simple as just saying, I'm just not going to participate. It's they have to meet additional requirements for accounting and process.
Okay, so if the state decides to forego contributions to the state plan and they decide to self-insure, are they still then required to collect contributions or from both the employee and the employer to that fund or to that plan?
So in our regulations, we provided that employers have the option to cover the full cost if they want. As I mentioned, we've gone out across the state and we heard a lot of interest from employers to just cover the full 0.9%.
Okay.
And so the answer is no, the state wouldn't have to deduct from state employees' salaries the 0.45%, but they could. That option is available to them under the law.
But they would still have to make up the full 0.9% of covered wages.
Not under self-insurance, because the self-insured entity, an employer, in this case the state, meets requirements and promises to, in this case us, part of the state, the Department of Labor, that they are meeting the requirements that they are going to pay benefits when due. So that's what's required under self-insurance. So they don't need to take funds from employees' paychecks in order to pay the benefits. They need to promise that they are going to pay the benefits.
So you're telling me the state of Maryland, of a policy that we created, could say, we don't want to participate in the state plan that we have made for all the other employers out there. We're going to self-insure ourselves and make a promise back to a department in the state that says we'll make payments when required.
Senator, that's actually an option for every employer in the state, right? Every employer has the option to self-insure. As Elliot said, that means we're going to require documentation and demonstrations of that you can actually financially meet it. But I'm thinking of I came from a large corporation before this, and some of those companies may say, look, we have 12 weeks of paid leave and we pay out at full salary. That's how we do it. And we if you can demonstrate that that's what's going to happen and that those benefits will meet at least the basic requirements of what is set forth in the law, then you can do that as a large employer or a small employer, as long as you can show you have the means and the programs in place. I mean, that is what the law says, is that any employer can self-insure, and so that is an option.
It's a bit concerning, though, if the state is pushing that program off to another entity of the state and you're giving the approval of that.
I mean, Senator, we'll make sure, obviously the state as an employer is a little bit different because any new benefits put in place actually have to become part of state law, right? It actually isn't like every other employer. They actually have more hoops to jump through, and those hoops will involve coming in front of this body to get approval for how the state would take that on. So I do think you will have the ability to provide feedback to how that's done.
Okay, and then last question. So there's no real way to tell what type of budget impact this would have to the state of Maryland if, for instance, if they had to go into the state plan, we would know very clearly the state's payroll, what 0.9% of it is, and if they decide to do 50-50 or not, we would have those numbers. But if they go into a self-insured plan, it's just, again, a set of documents, and somehow they are assuring itself that they would pay out these benefits if they're called upon.
Senator, I don't want to speak for DBM because they're the experts here. However, it is possible to know an estimate from a budget standpoint because, the state already provides some level of leave now, and they make estimates based on how long people will be out on leave, what it costs. So it is possible to make estimates. I think the ultimate determination will be, what is the level of those replacement benefits? For example, you may have some employers, and the state may choose to do full pay instead of partial pay. Right, so all of those choices will make a difference as to the ultimate budget cost in the end. But it is possible to make estimates, and I can commit we obviously will work with DBM to make sure they provide the information that you're seeking.
Okay, all right, I appreciate that. Thank you very much, Secretary. Elliot.
Thank you, Senator. Senator Reedy.
Thank you, Madam Chair, and thank you for the presentation again. For all this information is great. First question, the 0.9%, can you tell me, I know we did the bill and I remember that total, but what's that going to amount to per worker and per business? And I know it may fluctuate slightly, obviously, based on how much the employees make and all that, things of that nature. Can you give us kind of a ballpark figure of what we think that will be?
Sure. So we did pull some numbers for just in preparation for this. So I can give you a number of options that you can pick which one you want. So there's biweekly costs. A lot of people are paid on biweekly payroll.
The easiest way to say it is it's less than $6 a week for each side up to the median. So the median wage in Maryland is somewhere around $70,000. So for like workers up to that median wage, it's somewhere between $270 to like $630 a week, and that's the 0.45 on the employer side and the employee side. Obviously, if you have higher wages, the contributions are higher. So, but that's an easier way for me to think about it anyway, instead of saying like different percentiles or whatever.
That's actually very helpful. So we think for folks who make up to $70,000, they're going to be that would cap out at about $6 a week or maybe a little more. And then as low, though, is maybe $3 a week, depending on if you're making maybe 35 or 40,000 or whatever.
Yes.
But then when you get up to closer to 80, 90, 100, you might get up in the $7 to $8 a week range for each side.
Each side, correct.
So in a biweekly paycheck, someone making $90,000 a year is probably having $15 taken from their paycheck, and the business is contributing $15 to their paycheck.
Roughly, yes, that's right.
Give or take 30 cents, right? Okay. And then we'll do this for a year, and then that obviously seeds the fund. And I know you can't pay out benefits when there's no money, so that seeds the fund. Okay, I mean, I think it's going to be important that be communicated as much as possible, because I feel like a lot of folks don't remember that we passed this or knew that we passed it. And there's a lot of, the advocates come down and talk about how we're going to get family leave and you're going to have paid time off. And, it's going to be a surprise to some people. So that's just a little, I guess, admonishment that we probably all need to communicate with our constituents. I do have one other question, and it's not on the side of the payroll tax, payroll deduction. What is the administrative cost? What is how many employees are we going to need to dedicate to administering this fund?
Our current plan is about 300 that includes, and that's because we are also managing contributions and accounting with managing a trust fund and processing benefits. So we're essentially setting up an insurance company to be able to process claims from workers and to receive and account for tax contributions from employers and workers, and also to enforce the requirements under private plans. So
that 300 includes enforcement?
It's everything.
Okay. And is that 300 new PINs, or is it, okay, it's not, no existing resources. I mean, obviously you two are existing resources, but no existing resources. That's
right, because the division,
on top of whatever.
The division didn't exist before. Obviously, it does. We do draw on resources like our general budget team or IT, things like that. There's infrastructure, the department, but that's sort of 300 new staff to do but that's everything. I would say that's not just administering the fund, that's running the whole
operation. Understood. Is that and that will come out of the Department of Labor's general funded budget, or will that come out of these fees?
Out of these fees.
Correct. It's fully special funded. So the 0.9% contribution and the small under $1,000 administrative assessment on private plans, that gets pulled into the trust fund, and the trust fund pays all benefits and administrative costs. And I understated the amount a little bit. Our current estimate is 350 to 400 staff for
350 to 400.
Yeah.
Okay. Are those, and so even for like their benefits, their paid time off, their pensions, all of that will come out of the trust fund?
Yes.
Okay.
I would defer to the budget experts, because I know there are different ways, when sometimes general fund absorbs certain increases when things happen. I know there's some
health insurance.
Yes, there's nuances.
I get it. No, I appreciate it. Thank you very much. Thank you.
Thank you. I have a couple of questions. I guess I thought we were going to be requiring a third party to actually administer the benefits, but you just said 300 people, including administering benefits. So we're going to collect the money, administer the benefits, do everything within the Department of Labor.
To the extent people participate in the trust fund, you're right. Yes, we are going to pay out those benefits. It'll be sort of like unemployment insurance, like we make a determination on the amount we pay out.
Well, I don't mean to put you on the defensive, but we haven't had really good luck with paying unemployment. And so I need to know that you're going to have good processes to reach people that are making the benefit. Are they going to be able to easily track their benefits, know when their checks are coming, or their funds, or are they going to go into a debit card? I mean, there's just the processes that a private company knows how to do, you're going to have to set up from scratch.
It's a huge challenge, Madam Chair. We don't deny that. We feel fortunate that one of the key vendors that we were able to procure, I mean, just the IT systems alone to make sure, and frankly, that's the backbone of it, because I think that's something we've learned from unemployment. If it's not built to do that, then trying to sort of like manually figure it out afterwards is a total nightmare. We feel very fortunate that one of our vendors actually built this system for Massachusetts as well. So we've deliberately gone after that. And obviously, Elliot came from DC, where he helped when they were setting up their paid leave system in Washington, DC. But it's important to have that expertise, because you're absolutely right. It's complex. And frankly, Maryland's law is among the more complex paid leave regimens. So we need to make sure we get it right.
So no third-party administrator, all done within
That's
your
not
department.
the current plan. Yeah.
Will you be setting up processes so that people can expect what's the speed going to be on their benefit, the speed that you're going to answer their claims? I mean, that will all be part of the processes that you set up.
We have some specifics and regulations. Elliot, I don't know if you want to speak to that, of like how fast we have to respond.
Sure. Yeah, 10 business days is in regulations. We hope to be much quicker than that. And I think the pizza tracker idea that the Secretary alluded to earlier is something that other states have been successful with, including Massachusetts, and have really cut down on call volumes. And it just, it helps the whole process, because people can see it cuts down on call volumes, it cuts down on frustration on calls. So things like that we're learning from other states. And it's good and bad that it is a new system, a new law, because unemployment insurance is incredibly complex. And I don't mean to underestimate the complexity of family medical leave insurance, but it's a state law. There's not the same level of federal oversight. So there are some advantages working in our favor that allow us to be able to create a system that will work for your constituents.
And the benefit will be like Social Security, 66% of their salary. Remind me, if you will.
It goes up to 90%. It's on a progressive scale. So for the lowest paid workers around the minimum wage, they'll receive a 90% wage replacement, and it declines from there in terms of wage replacement when it maxes out at $1,000 a week.
Maxes out, okay. Yeah. And that's for 12 weeks.
For 12 weeks, yeah.
Thank you very much. Do I have any other questions from the committee? Vice Chair.
Madam Chair, more of a comment than anything. I just want to thank you, Madam Secretary, Elliott, and the whole team, including Reagan. This is tough. It's a big lift. It's a change, a huge change in policy, and making sure that families in Maryland have the resources to take care of their loved ones and things like that. It's challenging. You guys have been very agile in, pivoting and dipping whenever you can. But definitely the public outreach is, I think, a unique, gold star that I think we have here in Maryland to make sure that employers and employees, those that may be affected by these new policies, are aware of what's happening. So I just wanted to take just a moment just to say thank you for all the work that you guys have done in this regard. Thank you, Madam Chair.
Thank you, Mr. Vice Chair, for your leadership. We have done a number of focus groups, and we're happy to share some of that information with you. But overwhelmingly, we are hearing from employers. I think it was Senator Reedy's comment earlier. So they're saying, wait, what? I forgot about this, or I didn't know. I'm willing to do it, but I need to really understand. What do I have to do? When? How's this going to work? So there is a real hunger for that information.
Thank you very much, Madam Secretary. I don't see any other questions. That ends your presentation for today. It's very nice to see you. Thank you. We're going to need about a 2-minute break while our committee manager sets up the next briefing. So Mr. Popham, if you would bring your folks to the table and get set up and make sure your PowerPoint's keyed up, I'd appreciate it. Thank you.